What if the biggest opportunity in crypto isn't ahead of you, but already behind you? What if, while most investors are still waiting for Ethereum to crash lower, the real bottom quietly formed, and the smart money has already moved on? Because according to one of Wall Street's most closely followed strategists, the moment everyone feared may have already passed. And if that's true, then the question isn't when to buy, it's whether you're already too late. But here's where things get interesting. For years, crypto investors have tried to do one thing better than anything else: time the bottom. Buy at the absolute lowest point. Catch the reversal. Ride the next explosive cycle. But almost nobody gets it right. So, when Tom Lee, a respected market strategist known for bold but calculated predictions, suggests that Ethereum may have already hit its bottom, it raises a critical question. Is this the beginning of a new cycle, or just another trap before deeper losses? In this video, we're going to uncover what's really happening beneath the surface of Ethereum's price action, why this moment could be more important than it looks, and what it could mean for 2026. Because the answer might change how you see this entire market. To understand why this claim matters, you have to zoom out. Ethereum isn't just another cryptocurrency. It's the backbone of decentralized finance, NFTs, and thousands of applications built on blockchain technology. Every cycle, Ethereum doesn't just follow Bitcoin, it amplifies it. In previous market cycles, Ethereum has experienced brutal drawdowns, often losing more than 70% of its value before recovering. But those same crashes have historically created the greatest opportunities. After the 2018 crash, Ethereum looked dead. Developers left. Prices collapsed. Media attention disappeared. But behind the scenes, something different was happening. The foundation was being rebuilt. And when the next cycle arrived, Ethereum didn't just recover, it exploded. But this time feels different. Higher interest rates. Global uncertainty. Tighter liquidity. A market that no longer moves on hype alone. Which is why many investors have been expecting one more massive drop. One final capitulation. A true bottom. But what if that moment already happened, quietly, while everyone was distracted? Tom Lee's argument isn't based on hype. It's based on patterns. And more importantly, behavior. Markets don't bottom when everyone is watching. They bottom when everyone has already given up. When fear becomes exhaustion. When selling slows down not because people are optimistic, but because there's no one left to sell. And that's exactly what some data suggests happened. Trading volume declined. Volatility compressed. Sentiment hit extreme lows. And yet, Ethereum stopped falling. It stabilized. And then, slowly, it began to climb. Not in a dramatic way. Not with headlines. But quietly. Almost unnoticed. But here's where things get interesting. Because bottoms don't announce themselves. They hide in plain sight. Most people think bottoms look like crashes. Sharp drops. Panic selling. Capitulation events. But the truth is, the real bottom often forms after the crash, during the boredom, during the silence, when nothing seems to be happening. This is where weak hands leave the market, and strong hands accumulate. In previous cycles, Ethereum didn't bottom on the day of maximum fear. It bottomed weeks, sometimes months, later. When attention disappeared. When nobody cared anymore. And if you look closely at recent market behavior, you can see something eerily similar. Price stopped reacting to bad news. Negative headlines lost their impact. Selling pressure faded. Which suggests something critical. The market may have already absorbed the worst. And if that's true, then what we're seeing now isn't uncertainty. It's transition. To understand this fully, you need to think about how markets actually move. Prices don't rise because things are good. They rise because things are less bad than expected. And they fall not when reality is bad, but when expectations are shattered. For the past few years, Ethereum has been under pressure from multiple directions. Macroeconomic tightening reduced liquidity. Regulatory uncertainty created fear. And competition from other blockchains challenged its dominance. But at the same time, something else was happening. Ethereum was evolving. The transition to proof-of-stake fundamentally changed its economics. Supply dynamics shifted. In some periods, Ethereum even became deflationary, meaning fewer tokens in circulation over time. At the same time, institutional interest didn't disappear. It paused. And now, slowly, it's returning. Layer 2 solutions are scaling the network. Transaction efficiency is improving. And the ecosystem is becoming more mature. So, while the price action looked weak, the foundation was quietly strengthening. This is what makes Tom Lee's perspective so compelling. He's not just looking at price. He's looking at structure. Because markets don't bottom when everything looks perfect. They bottom when the worst is priced in. And improvement begins before most people notice it. And if that's happening now, then Ethereum isn't in decline. It's in accumulation. But here's the part most people ignore. Even if the bottom is in, that doesn't mean the path forward will be easy. Markets don't move in straight lines. They test your patience. They create doubt. They shake out weak conviction. Ethereum could still experience volatility. Short-term pullbacks. False breakouts. Moments that make it feel like the bottom wasn't actually in. And there are real risks. Macroeconomic conditions could worsen. Interest rates could stay higher for longer. Regulatory pressure could increase. And competition from other chains could continue to grow. There's also the possibility that this is simply a temporary recovery, a relief rally in a longer bear market. Because no indicator is perfect. No prediction is guaranteed. Even experienced strategists can be wrong. Which is why understanding risk is just as important as recognizing opportunity. Because the biggest mistake investors make is not being wrong. It's being overconfident. So where does that leave us? At a crossroads. Between fear and opportunity. Between hesitation and action. If the bottom is already in, then the biggest gains won't come from timing the perfect entry. They'll come from recognizing the shift before everyone else does. But if it's not, then patience may still be the most valuable strategy. Because in markets like this, clarity doesn't come first. It comes last. Only after the move has already happened. Only after the opportunity has passed. Which means the real question isn't whether Ethereum has bottomed. It's whether you're willing to act before the answer is obvious. Because by the time everyone agrees, the opportunity is usually gone. And in a market driven by cycles, psychology, and timing, the difference between those who win and those who watch often comes down to a single moment. A moment that looks ordinary, feels uncertain, and doesn't feel like a bottom at all. But turns out to be exactly that. Thank you and subscribe now.